The CEO of SpaceX, Elon Musk, is currently the richest person on the globe, and his fortunes only seem to be getting better. These are valuable businesses, and it appears that they will only become better with Musk leading them. The man has a ton of brilliant ideas. Musk revealed something shocking regarding Tesla, his electric vehicle company, and its shares last. Almost anyone would be alarmed by Musk's remarks, which we'll go over in this article as he makes predictions about an impending recession. Why does Musk anticipate a recession? To what extent would this impact Tesla stock? In today's video, let's find out. Elon Musk has experienced significant financial setbacks in the past. First, when the dot-com boom burst in the 1990s, he was working for the company he and his brother had started. Everyone was impacted by the turn of the 21st century, but Musk managed to weather it. He went through another recession in 2008 while serving as the CEO of SpaceX and Tesla. The outcome was that both companies almost went bankrupt. He did, however, manage to endure the worst in order to reach his current level of accomplishment. Elon thinks that something similar is about to happen and that it will happen in the early months of 2022. Similar to the 1990s bubble, when many people owned multi-million-dollar businesses, there is currently another bubble. Elon Musk claims that the current number of businesses valued at more than $1 billion, abnormal and unsustainable, with close to 1,000 of them falling into this category. The majority of these businesses will disappear in 5 years. Everyone who has ever experienced the pruning that comes with time understands that it will happen quickly, brutally, and painfully. In order to put things into perspective, towards the end of 2021, there were over 900 enterprises valued at more than $1 billion. As of 2019, there were just 150 of them. How did that number increase so quickly? And how many of those companies will withstand the upcoming purge? Elon thinks that 2022 or 2023 at the latest will see the start of the recession. More than at any previous point in history, consumer prices are rising at an alarming rate. The government's excessive spending, which led it to print its way out of the 2020 recession, is one of the primary causes of this. The same government is currently rushing to boost taxes in order to pay for itself. Today, the average American worker must spend around $22 per hour to maintain federal funding. This is a ridiculous amount. In order to lower the federal government's budget, the Federal Reserve plans to decrease quantitative easing and increase interest rates. In a recent press release, the Fed indicated that raising interest rates to 0.9% in 2022 will be necessary. Even though 0.9 might not seem like much, it represents a substantial rise when compared to the average interest rate during the previous 10 years. This is not the Federal Reserve's first attempt at this. When they attempted to boost interest rates to 2.4% back in 2019, the market responded negatively, leading the rate to plummet to 1.5%. And this was before to the start of the pandemic. 0% interest rates are already widely used in financial sectors. Even a 0.9% increase would be detrimental to the market. The goal of the Federal Reserve is to maintain the health of the U.S. economy. Neither too much heat nor cold is ideal. Economic stability can be jeopardized by distortions like inflation that spiral out of control during periods of economic expansion. At this point, the Fed steps in and raises interest rates, which serves to moderate the economy and maintain a steady rate of growth. Then they are responsible for managing the amount of money in the U.S. economy through monetary policy oversight. Although the Fed has several tools at its disposal to carry out its goal, its ability to influence interest rates is by far its most visible and potent monetary policy tool. The federal funds rate, also referred to as the federal funds target rate, is what the Fed is referring to when it raises interest rates during its regular meetings. The federal funds rate, which serves as a benchmark interest rate for overnight loans, has a target range set by the Federal Open Market Committee. Large commercial banks impose fees on one another for overnight loans in order to satisfy liquidity standards set by regulatory bodies like the Federal Reserve. The average of the rates that banks bargain for overnight loans is known as the effective federal funds rate. The prime rate and secured overnight lending rate are two examples of other market rates that are impacted by this. The federal funds rate is the primary benchmark for interest rates in the U.S. economy as a result of this indirect structure. It affects interest rates across the board in the global economy. What will happen if interest rates are raised by the Federal Reserve? The goal of the Federal Reserve's increase in the federal funds target rate is to make credit more expensive for the whole economy. As a result, loans grow more costly for businesses and individuals alike. Everyone ends up spending more on interest payments when interest rates rise, including those who are unable or unwilling to make the bigger installments. Delaying concurrently funded projects encourages customers to save money in order to pay higher interest rates. As a result, there is less money in circulation, which tends to restrain inflation and slow down the economy. Elon Musk predicted that a recession might start in the spring of 2022, about the time the Fed stops purchasing treasuries. This sounds awful, but it could also portend a financial catastrophe that's even worse than a recession. The definition of a recession is 2 consecutive quarters of negative GDP growth, which makes them incredibly common. Thus, a 2-quarter GDP decline of 0.5% qualifies as a recession. Even in this case, recession, on the other hand, happens when the GDP declines by more than 10 a single year. Among the most well-known instances is the Great Depression. The GDP of the United States decreased by 30 at this dreadful time in history. Economic prosperity preceded the Great Depression, as it had in every preceding financial disaster, referred to as the Roaring Twenties. One of the greatest speculative eras, the Roaring Twenties, naturally laid the groundwork for the Great Depression. With the level of speculation that exists today, pictures that have no intrinsic value are being sold for tens of millions of dollars. And children are becoming billionaires just out of bed. Communities in the third world are profiting handsomely from cryptocurrency gaming. I don't know if this isn't the Roaring Twenties. Elon Musk respects Cathie Wood's viewpoint, which we've covered in earlier films, and she has noted that increasing retail inventories are one of the other elements contributing to a recession. She believes that a major factor in the economic slowdown is oversupplied inventories. Because supply chains are finding it difficult to meet consumer demand, retail stocks have substantially declined from their pre-pandemic levels. In order to meet customer demand, firms have responded by placing orders for absurdly high quantities of goods. They have exceeded the claimed demand, which is the issue. A lot of merchandise is just sitting there gathering dust. While imports have increased by more than 4.7% and exports have decreased by 2%, retail inventories have increased by more than 2%. On the other hand, real savings rates have decreased by about 6.9%, while consumption and services have stagnated. Wood feels that there will be a recession and a downturn in the economy as a result of inventories rising at a 24% yearly rate. Regarding this matter, there are now 2 schools of thought. Those who think that a recession is imminent and others who think that there's more smoke than flames. The latter is less dependent on the market. The creator of Social Capital, Chamath Palihapitiya, has been shorting Netflix, Apple, and Amazon while purchasing Microsoft and Google. Cathie Wood has been shorting well-known companies like General Motors, which she believes would suffer a tremendous deal in the event of a stock market meltdown. The largest hedge fund manager in the world, Ray Dalio, thinks that investing in Chinese stocks would yield returns that will reduce portfolio risk. What steps have lawmakers taken to improve the situation? Not really, and it's not even Elon Musk saying this. Former Treasury Secretary Lawrence Summers asserts that the White House is misinformed of the reasons for elevated inflation. According to him, attributing the impending recession to corporate greed has only made it more likely that a recession will be necessary to rein in rapidly rising prices. The matter has been horribly misdiagnosed. Although the government has been pursuing billionaires for unpaid taxes, the reality is that our economy needs to cool off because it has become too hot. Elon Musk has kept up his innovative streak while the government attempts to sort out its politics and ideally a solution. Nobody is aware of his strategies for reducing the recession. But given that he has survived 2 of the worst financial crises in recent memory, we have no doubts that he will succeed. Do you believe that Musk's projections are accurate then? Please leave a comment below.